as we get ready to trade August week 2, starting with Monday, August 9th. So here is our 5-minute intraday chart of the S&P 500, and this was Friday's action. As you can see, we gapped up open on the tail of a good non-farm payrolls report that sort of crossed out the negativity that we saw in the ADP report. We rallied to what wound up being our high for the day in the first 5 minutes, 44.40.82. And for the rest of the day, we kind of traded in a range, balancing above 44.29, where our previous all-time high and our new all-time closing high that we made Thursday going into the bell. We held support above that, but we couldn't quite break out back to the all-time high that we had made in the morning. And that is the product of call sellers who clearly had a bet needing to keep 44.50 down. So what we need to see on Monday is to come in and continue holding this 44.29 area, see if there is or is not that options hangover thing that we sometimes get on Monday where the same bet plays out. And if that's the case, if we can lift that resistance, we're going to break right on out to 44.50, and we're going to continue through to 44.60, 44.80, and finally 4,500. On Friday, we made a new all-time closing high and a new weekly all-time closing high at 44.36.52. So if we do take out 44.40 on Monday and make a new all-time high, we need to close above this 44.36.52 level. When we look at the roadmap, you can see what I'm talking about, how we finally broke out of this resistance. For 10 sessions in a row, we've been stuck below 44.30. This is a product that we often see when we cross a new handle. Once we cross the 4,400 handle, we needed to see 44.30 to 35 get taken out and go to 44.50 so that we could start the 80 handle roll process. So finally on Friday, we've opened and we've held above it. We need to see that follow through on Monday. If we open on Monday and do not follow through on this and fall right down through 44.29, we're going to go right directly to the 10-day simple moving average. It's rising. It was 44.11.74 on the close Friday versus 44.09 on Thursday. So it's rising a couple of points a day. Let's say it's going to be around 44.14, 44.15. That's what we would fall back to. That would be our first line of support. And if that doesn't hold, then maybe we fill the gap to last Wednesday's close at 44.02 and test that 4,400 handle. If that 4,400 handle cannot hold, we fall back to 43.80. It's the 80 handle rule playing out, but in reverse. What's in the 43.80s? The 20-day simple moving average. Closed at 43.82.61 on Friday. It's not rising very quickly at all. Still going to be in the 43.80s. That's what we're going to do. We're going to come back here and test that. The last time we had a bit of a sell-off here on the 3rd this week on Tuesday, we sold off down to the 20-day and reversed above it and rallied back to close at a new high of the day. So that was a pretty big solid reversal off of the 20-day. So if we come down to the 20-day again, we need to see a solid reversal off of it. If we don't, then I think we're probably going to take the range from all the way up here at the all-time high to wherever the 20-day is at and double that down, and that's going to get us all the way down here near this area of this other gap that takes us all the way back to the July 20th close. See how that all plays out. I don't think that's coming this week. I think that we're going to hold support at minimum. Maybe there's that options hangover thing on Monday where we're still stuck in this range below 44.50 but holding above 44.29 to 44.30. And then on Tuesday, maybe we break out. But if we don't have that options hangover, you've got to be looking for a new all-time high and for us to stick the landing above 44.50 so that we can press onwards toward 4,500 by way of the 80 handle roll. Finally, let's just take a little look here at the simplified daily chart. This is the chart that used to have the fork on it. Took that fork away because we broke the bottom of that fork with our last big sell-off in July. This one here broke it. So now we have to look for a new element to trade around. But I did put these arrows on here. This was the last video I posted showing where all the last non-farm payrolls reports were. You can see this one that happened in April. This was the one where the market was closed on Friday when the report came out. So there was a rally into it and then a rally on Monday, the day after, followed finally on Tuesday by some consolidation and then a continued rally. But here at this one that came out in May, you can see we sold off the day after, and it was several days of selling. This one here in June, this was a miss. and we sold off that day of the non-farm payrolls report. But you can see on Monday, we digested it over the weekend and changed our minds about it and realized, it's not so bad to have a bad non-farm payrolls report because that means the Fed's probably not going to raise. And then this one in July, you can see we sold off the day after, but, looked below the previous day's low, but rallied back to close a lot higher than the low of the day and then followed through with a higher high the next day. So there's really no rhyme or reason to this. And we didn't have that big of a day on Friday, so I think there's a good chance that it'll be an inside day at worst, but probably more likely leaning towards follow through on the rally. So let's see how that all plays out. And then finally, let's just take a quick look at the options. I was liking these 44.60 calls on Friday, and they did a good job of holding their $8 window on the lows for the day. And over on the put side, I really like the 4400s. You might as well go as high as you can. You might as well be looking at the 4400s. They're above the $8 window, so you could go down to the 44.95s or whatever. But if we come out of the gate and we rally up to a lower high against 44.80, and we're going to end up pulling back to the 10-day simple moving average, these are going to make at least a double for you probably on that move. So if we rally back up to around 44.40, these would probably drop to the $8 window. And if we fail to make a new high and pull back to the 10-day, you could probably scalp a nice double off of those. Those would be the puts I would be looking at. And like I said, in the calls, I'd be looking at these 44.60s as long as they keep holding the $8 window. And if we sell off down to the 10-day, you can come all the way down here to the 44.50s or lower and probably get in the $8 window there. That's how the options would play out, in my opinion. Hope this video helped you out. If you have any questions, just shoot me a direct message on Twitter. Have a great rest of your Sunday. As always, good luck and good trading.